Hello traders, Gary Wagner here for Trending Markets. Just about noon in Honolulu, 5 o'clock in New York. It's Monday, 16th day of November 2015, and we do have Dow Jones Industrial Average and U.S. equities markets as a whole back in rally mode, trading up triple digits in the Dow Jones Industrial Average, up 237 points or 1.38% higher on the day, 17,483. Now, when we translate that over to the S&Ps, because we did send out a special trade alert earlier this morning, we do have the S&Ps substantially higher, up about 30 points at 2048.75. Now, the recommendation we sent out was, as I said, as the market was just beginning the rally early this morning, late night in Hawaii, and we issued that recommendation. The market was trading at 2022, 2023. So we've got about 25 points already on the trade, and we just put the trade on this morning. This could turn out to be a tremendous trade, but there's a couple of ways we want to look at this. First, I want to look at the bigger picture through the daily charts. And we've done this. We have done just that. We pulled up our daily chart. You can see the single candle right here. What really interested me this morning, as this market began to trade, of course, you can see that it was actually trading at around a low of about 2002. Incredible low, but that low just matched this 50-day moving average. And if you recall from Friday's show, I said that I believed that it would trade to this point, but I also believed that this would be a supportive area for the market. And so as this market bounced off of these lows, and to really show you this, we've got to go to some intraday work, but as this market traded off of these lows, we saw a genuine rally beginning to materialize. And here's what I'm talking about. This is a 240-minute chart. In fact, let's turn this into a 2-hour chart, 120 minutes to get a better idea. But as the market opens up in here, we got in roughly at 23. So call it this area right here. There's 20, 25. So right roughly in this area, what I saw was that we came up off of these bottoms. We started to really form that V that we look for. And then, as I said, we also had the 50-day moving average. That's where these lows came in, right around here. This is the 15th. Of course, this is Sunday as it starts to trade. And it was trading quietly lower at some points, but then began to move up. We got in right in this area, right before the last couple of hours of trading, where we really saw a spike, this being that 4-hour block that did it. And then the final time, this of course being after hours Globex here, but it kind of backfilled just a little bit. But as I said, trading at 2048, we're in at 2023. So I'm very, very happy and comfortable with that trade. We will look to move those stops up. I'm just trying to figure out what the logical point is. Right now, I'm probably looking at about 2024. That's the lows in these candles right in here. And that's probably where we'll trail our stop up. That way we protect our equity. In other markets that we're looking at, of course, the dollar was tremendously strong today. You can see it trading up right in here. It is just below 199.42. We know that we have some resistance in the market, but that resistance doesn't really come in till about 100 on the dollar index. You can really see that on this weekly chart. These are a series of tops right in here at 100. So we're just shy of that. And as I said on the gold forecast that I recorded just a couple hours ago, I genuinely think we'll come up to 100, but we certainly could find it spike back down and find resistance based on these prior tops. If it continues to move higher, we'll just have to see where it wants to go. Lastly, we looked at crude oil. I talked to you about 3 markets that I liked, and my forecast, this was on Friday, I said that I believe the Standard & Poor's would go higher. We nailed that one. I said that the dollar would go higher. We certainly hit that one. I also said that crude oil will probably go lower. I was right only early in the morning, because in the morning this market actually traded and touched to a low of about 40. But I wasn't to be right for too much longer, because over the last half of the trading session, this market spiked up to go from a negative and to go from just at around 40 to close at about $42 per barrel. Quite a recovery in the market. I kind of want to stand on the sidelines with oil. There's just too many geopolitical variables in there that we really can't control nor contain. So we have sat on the sidelines there, but I will tell you this. I'm extremely pleased with where we got in on the Standard & Poor's, and I believe that we have some tremendous room to the upside. Even if we look at these channel lines, I believe that we could then go to bullish if we break above this channel line here. Again, this is a 240-minute or a 4-hour candlestick chart in Japanese average format. Maintain your current long position in your Standard & Poor's. You can go ahead and trail your stop up to just below 2023, basically locking in or protecting any equity in the trade. I'll also put that out in a trade recommendation when we send out our notification that the report is up and ready for viewing. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.